mission is to empower people not just to fund what matters to them, wherever they are, but also however they'd like to fund it. And so philosophically, equity crowdfunding makes a ton of sense. Yes, it's returning back to our roots from where it all began, but it's also people, by saying things like it's too risky or it's not right for people, it's a very patronizing tone.
Is in there that we support, like education for investors, and the ability to do parallel offerings, traditional, what we call Title III crowdfunding offerings, as well as Title II, targeting accredited investors simultaneously. So there's some good things in those rules, but there's also some troubling things there as well that could really harm the industry. So my business partners and I are still involved in the process in Washington.
Long-term impact of crowdfunding and what that's going to become in the future, and that it can impact all kinds of markets. And so we are really adapting it to, I would say, more a depth area. So women-owned business and particularly small business. And we see great potential, even variations on the equity, because a lot of the kinds of businesses we work for are not going to have the traditional equity exit.
Professional investors are watching what's happening on the crowdfunding platforms and then taking that as product market fit and then actually investing in the companies right away, far earlier than they ever would have. So
well, I think it's interesting because a lot of people say, oh my God, equity crowdfunding, I'd never do that. You can't get money after it. Lawyers hate it. You can have all those people on the cap table. Those same issues were brought up 15 years ago when angels started to be, really active. It's the same kind of thing now. It's just these changes are difficult and it causes some chaos, but we're going to work